So I like this one a lot because, well, at least as of right now, the gap is left unfilled. So you're breaking above whenever you pull into the short-term moving averages and then you gap up and push higher. It's what I refer to as a gap and go. So obviously, when you have a gap left unfilled, it's a sign of strength if it's to the upside, vice versa up to the downside. So it's just a really assertive way to start the next move higher. And this is also in a very strong sector, energy. You have other, I think this industry was actually breaking out or near breaking out. Let's take a look. Oh, it did. So you can see it's a very strong group. I could have a move much like this over here too. So definitely upside. But the energy stocks is where it's really been. Excuse me. So this is a beautiful bull flag here. You got a gold miner. If you look at the poll, you can see it was on monster volume. This volume here is on a long lead doji though, so really I would want to get past this. But then you can see the flag was building out on dry up in volume. So it's the volume is just as important as the pattern itself. That's how you really assess quality. There's other variables you can include in there too, but those are the two primary. So one would really want to see this break above this level here and look to a long. AppV. This looks good. For short. I was surprised that yesterday the healthcare sector made another leg lower, whereas AbbVie held up. So this is primarily due to pressures from J&J. It's been getting annihilated. It does have earnings though on the 16th, so it could cause a gap up, and that's just the fun of earnings season, because then you get a bunch of, you have to constantly be aware of the different sector leaders, because based off of however they move, you can get sympathy moves in like stocks. So, for instance, if J&J caps up 10%, it's going to alleviate a lot of pressure on the healthcare sector, and you could see gaps in all healthcare names. So we are still stuck in this range. Literally nothing changed from, what is it, Monday? Wrongly Thursday. We're about the same area as we were on Monday. So CPI changed nothing, unfortunately. Which means the next thing in line would be earnings season. So perhaps that's what the market needs. We got JP Morgan announcing their earnings tomorrow. We'll see how the market reacts. It should be in the morning. They usually report in the morning. Yep. So we got JP Morgan tomorrow morning. It's going to obviously affect the financial sector significantly, which is already pulling into the 50. So And the market usually has some kind of reaction to JP Morgan. But really, the biggest reaction is going to come from big tech. Netflix, I think, reports next week, the 18th, next Thursday. That's when we're going to start to get some fireworks. But it's really Microsoft, Meta, Apple, and Apple. I guess you can include Google there. They're going to have the biggest impact on the markets. So Amazon is 2 weeks out. Oh, of course, NVIDIA. But NVIDIA has quite a bit of time, about a month and 10 days. And then Apple is also about 3 weeks out. Microsoft, 2 weeks out. So 2 weeks out is going to be the core of earnings season. That's where we're going to get, I think Microsoft, Meta, Google, all reporting the same week. And then you have Tesla. But I've noticed the market doesn't really have much of a reaction to Tesla. It's more so this specific industry, its group itself, that will react most heavily to Tesla. But it's not like people are. My point is they're not really too concerned with Tesla as a whole, like they're Apple or Microsoft. One might wonder if someone knew something, wink wink, yesterday, when this stock broke out. If you look at the daily volume, it's actually easier to see on here. Go to active, Alpine. If you just look at the daily volume bar, and like you go back, the last time it saw volume like that was on earnings, and was it? Yeah. But I mean, pretty insane volume that came in here, and it just so happened that about 20 minutes later, after market, they got bought out and by Vertex, which is a big pharmaceutical company, and that's why it gapped up 36%. So I just closed that out this morning. But good example of how you just follow your system, you follow the rules you set for yourself, you know what to look for in terms of price volume characteristics. Luck is going to find you in the markets. Doesn't happen often, and this is also, you got to be cognizant of when you're trading biotech stocks like ALPN, it could do just the opposite to you. You can have a huge gap down. So you got to be careful when you're trading, especially biotech stocks. If there's anywhere you're going to really abide by your rules, be very disciplined to your rules, even though you obviously should be at all times to the best of your ability, it's biotech stocks. When you enter, meaning don't oversize a position, don't put more than, a quarter of your, really like 20% of your account into any specific biotech stock, because they could hurt you very badly, just like it could bless you on occasion. There was a biotech stock last week that sold off or it gapped down like 54%. So even if you were following whatever you normally would risk for any particular stock, like let's say you're risking 1%, well, how much of your portfolio do you need to buy or use up in order to get that 1% risk? Are you using 55% of your portfolio? If you are, you can lose half that overnight. So something to keep in mind, and definitely be cognizant of when trading any biotech stocks. A lot of people will avoid biotech stocks altogether, but I've learned to like them, especially when they're in stage 2 uptrends, because they can have such big moves. This is like a 680% move in 6 months. So you just gotta treat them with respect and size accordingly, and you'll be fine. Gold's in a stealth bull market right now. Still see no one on social media really talking about it. CNBC just finally took note of it a couple of days ago. Most news stations focus only on Bitcoin because they're bought out. I don't really care. I'm just saying. But it's good. The longer it's not in the public eye, basically the more upside gold really has. Yeah, yeah, Don, it was. That's my alert noise for TC2000. Yeah, this definitely is extended right now. But the question is, first, where are we right now? We're on the first leg up of a stage 2 breakout, right? So it may be extended here in comparison to when it's in a, stage 1 base, but how does it fare compared to when it was in its stage 2 breakout, its first leg of a stage 2 breakout back here? How extended did gold get? Because if, let's say during that first leg in 2020, when it broke out, it got extended by like 18%. Well, hold up, I don't want to miss this. So look at the volume right now. I don't even have to zoom in. You can see this is a very heavy volume, and it's volume that we haven't seen for quite some time. And there's still 10 minutes on this 30-minute bar. So this, I could already tell it's gonna be very heavy volume. I could confirm that now. It's about 1,800 above average. So that checks off. So I'm gonna see use low of day here. Now the concern is just that gold is, I think, potentially extended here. So I rather the So look at the volume right now as we're breaking through a pivot point. So this 30-minute bar looks great now, but it all depends how it closes. If it closes like a doji like this on very heavy volume, that's not what I want to see. Obviously not very liquid. So it looks good right now. It's really all about how it closes. But I do love how it gapped up, left that gap unfilled. It's not anything too big, and it's pushing higher. So I like when I have a very clear pivot, like a bull flag high, because let's say by the end of the day it closes all the way down here, and it's like if it turns into a doji, I'll just close it out. I don't need to take a full loss, because I know that what I'm seeing here in terms of price characteristics is not conducive to what you would see at the beginning of a powerful move. If you're at the beginning of a powerful move, you're not going to have a doji. You're going to have a nice bullish candlestick like this, or like this, right? You're not going to get this. This is showing pressure. There's supply that we're running into, and I'm just going to get up. So oftentimes, let's say like right now my win rate's at 44%. Oftentimes, and it doesn't mean I lose more than I win, but in many cases, I would say probably 50% of the time, those losses are not even the full 1R, whatever I'm risking. They could be half of that or even less than that. So it's good to just keep that in mind. You do have that flexibility where you don't need to wait until you get stopped out. If the price action doesn't look the way you would like for it to, providing you have some kind of predefined criteria in your head as to what that is. For example, like what I just said, you get a doji below the breakout pivot at a place where you think you should start to see momentum pick up, then you could close it out. That's where you have permission in my head to interfere with the trade. And sometimes it ends up biting you in the butt and it moves higher. It is what it is. But yeah, I'll see how this goes here. This plays out. CCJ is another good one here. Nice little bull flag. It has earnings in 2 weeks, so. But these have been the stocks. It's been stocks like biotech. It's been stocks just stocks you wouldn't expect to make a lot of money in. It's where all the money's been the last 3 months. Like Lunar. You know, Alex is well aware of this one. You got a lot of the biotech names. There's been a lot of money there. There's been good trade setups and there's been very rewarding trades. But if you're trading only options, your pool is so small that you're not able to even scan for them. It's just they're not liquid enough to trade in the first place. So if you're trading shares and you're willing to trade, lower liquidity stocks, lower market cap stocks, there still was a lot of potential. So this probably won't move at all for quite some time because it got bought out. Usually we'll just do this for like a month. Like if we look at X, you can see how it just kind of moved sideways for several months. That's the same thing I would expect from this until it gets like finalized. So I just close it out entirely, move on. So HYMC is looking great right now. Has all the characteristics I want to see in a flag. Get the very high volume pull, all about the dry up in volume, and now we're reigniting higher on already volume that's higher than the last 2 days, and we're only 25 minutes into the day. So it looks great at the start, but it really depends how we close. Because if this volume moves up to, the equivalent of these 2 bars, but we close with a lot of wick, it could be a potential topping bar, much like this right here. You had a high volume close. So this looked great in the morning, right? If you just can envision it. It was a nice bullish candlestick, and it was on volume at that point in time. I don't know, probably say it was like up here. But I didn't get excited because you know how that could, mature. And by the end of the day, it matured poorly. So I just closed it out. So that's what I'm looking for with HYMC. I'll close this out. So I like the fact that AMD has this 30-minute bar here. It's like a doji, so when you get these dojis, it's kind of like a resistance zone. It's a high volume close. The volume's really not anything crazy, but it's showing that there's definitely some heat up here. And that's what I like to see as a bear right now. And then AbbVie's another good one. I think it's becoming, at this point, this bear flag is becoming too obvious to me. And the more obvious it is, the more likely it's to fail, just in my experience. It's also just it had the opportunity to break down yesterday, because XLB did, but it didn't. So, I don't know, maybe I'm overthinking it, but could still be entertained below this line. There's that volume. And that volume just shows it's showing the emotional intensity behind the move. So I could have broken out of this flag and just had volume like this. The probabilities of follow through when you get volume like this versus this are very low, and trading is a probabilities game. So we like this volume. I think I should have shorted Z instead of AMD. Just because I have so much more wiggle room. Like, for instance, with AMD, I have to use a very tight stop, which is yesterday's high. Not ideal in a choppy market. With Z, and we're risking a lot. Z, I could have risked the same amount. I could have put my stop all the way up here. So I could play with these in between the chop and not have to use such a tight stop in such a choppy market. It's different if the market is breaking below a major level with volume and seeing follow through, and you have some kind of meaningful catalyst behind it. But we didn't get that. You know, I think we closed yesterday. Yeah, we closed on the 50 moving average on a pickup in volume. So we didn't. So there's likely to see more. Whenever you do the 50 moving average, you usually get a lot of chop. So perhaps Z was the better option here. We'll see. Technically, AMD still looks bearish so long as it's below the 20 moving average, but we don't got the luxury of holding that through that any kind of pullback higher, unless you want to risk like $400 a contract, just 50%, just not feasible. So gold miners are obviously becoming a theme right now, and every theme has its stages. You're going to have first your strongest gold miners breaking out. So names like, what are they? Ega. Like they're the ones that are really going to lead the pack. You got, what else? AGI, Alamos Gold. And then you have your names that are kind of in the middle of the pack, where they're not considered leaders, but they're still strong. They're at least, moving in tandem with the commodity that they're paired to. And then you finally have your shittier names, such as HYMC, that are the laggards. And you can see this literally just broke out a couple weeks ago, like a week and a half ago. But it's usually these ones that are going to have, it's at the tail end of the move for gold before gold has some kind of correction of sort. but these can have very powerful moves in a very short period of time. So it was the same thing with AI theme. You first had your leader breakout, NVIDIA, right? This is your liquid leader. And then I think just a day later, you have your growth stocks that are breaking out. So the AI names, semiconductor names that have the best growth story. You can see this broke out, I think it was a couple of days after NVIDIA. So that's like the second wave. And then you have other names, right? You have AMD, stocks like that. And then you finally have your, basically like, think of it like the euphoric phase of that cycle, where you have like really any name that had AI in it that was just breaking out. I'm trying to think of an example right now. Do I have any on here? Like think CXAI. Yeah, here's one. So you can see this one broke out really late. So this one broke out on the 27th of February. So this is like at the tail end of the move, right? Look at where this stock is relative to where NVIDIA is. See, NVIDIA is breaking out, broke out on the 8th, whereas the stock I was looking at broke out on the 27th. So, and that just happened to be a couple weeks before NVIDIA has started to base. You got AMD showing relative strength today versus the broader market. Renix, yeah. Get ready to close that one out. I'm going to wait. I want to see how it reacts at the 5 EMA. So, oh man. IWM potentially flipping 50 moving average to resistance. We'll see if it could break below yesterday's low. Could see, well, obviously that's a very important level. So this would then be moving into stage 4 on intermediate term time frames. So this is stage 2. And this is what stage 4 looks like. So we've been moving into stage 4, meaning, bearish setups are more favorable. For this, well, this is IWM, so this is for specifically small caps. And then the same situation would play out for QQQ. If we lose this support level, 433. So stage 2, it's a nice powerful uptrend. You got 1 leg, 2 legs, 3 legs, 4. And then you have, this is what the correction was like. You break down into stage 4, you have multiple legs lower. Really, it was, well, I'm not going to overcomplicate things, but downtrend and then uptrend, right? So it's just shifting your intermediate term trend, or it's at least the transition phase into the beginning of the next trend. However, it can reverse. The first sign that you're potentially moving into that next stage, so from stage 3 to stage 4, is when you see how we're respecting it as resistance. And then you'd really get some conviction if we broke below a meaningful support. So I know a lot of you are familiar with it, but that's stage analysis, right? Primarily used on the weekly charts to identify a long-term trend, the primary trend. Because you want to do your best to trade in the direction of the primary trend, stage 1, stage 2, stage 3, stage 4. Stage 1, stage 2. You have corrections along the way. 2020 COVID bull market. You are from stage 2, 4, 2. Stage 3, stage 4, stage 1, and then we're on stage 2. Not looking so hot anymore. So the dollar will move into stage 2 if we break above this high. It's high right here. And that's obviously not what we want to see. But it's already making some progress here today, or this week. Very big bullish bar. Then we have a very important index. We have the FNGU. This is all the big tech stocks. And where this goes, the broader market generally follows. So it's in this base, and it's actually still hanging out in the upper end of the base, which is a positive. Using that 50 moving average as support. So if this index is using the 50-day moving average as support, That means a lot of the big tech names are using the 50 moving average as support right now, or finding support at the 50. So Nvidia in that area, Netflix in that area, Apple, dumpster fire. Tesla, same story. The sentiment's just so poor around Apple and Tesla that the only way it's going to be reignited is if off of a positive earnings reaction. So AbbVie's near the trigger. I'm already having enough fun with the AMD, personally. This is what I was hoping would play out for CCJ back here. So when I bought this big bullish bar, obviously I got humbled the next day, buying a big bullish bar on just above average volume into a major moving average. It's a no-no. And because of that, when I did see this bar during the last hour of the day, but I didn't have the courage to buy it because of what happened back here, and I missed out on a nice trade because of that. So that's why you gotta be really selective of where you buy, because even a month later, it could still affect you mentally. And that's coming from someone that's been doing this for almost 10 years now. So it was just a nice reminder for me. But this is obviously building on a nice cup with handle here. And also, the setup between here and here is significantly different, right? This time it's above the 50. This was below it, so this is a lot better of a bullish bar to go off of. And also, the volume was heavier here as well. Come on down. So it's going to reject it at yesterday's high in the 5 EMA area. I think my software's frozen it. Choppy trade within tight ranges with little reaction, with little major action on ECB and US data. If there's any kind of movement in the market that I find is significant, I'll usually just pop up this global news on Thinkorswim. The catalyst is usually there. Yikes. I wonder if money's coming out of Marvel and going into AMD. Head and shoulders, left shoulder, head, right shoulder, neckline. By the way, does anyone see the character change from on the QQQs right now relative to the moving averages versus, let's say, that really started back on the 4th? The 10 and 20 were acting as support the whole way up. Support, 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 support. Weaker reaction, but support. Now what is happening? Resistance to the 10 and 20, resistance, 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 resistance. So we're slowly transitioning right now into using the 10 and 20 as resistance instead. And once that 50's gone, it will be a lot easier for the bears to really push the market down. Really, the best stop for AMD is right up here. Right at the range high. Excuse me. I'm debating selling some of this here. Pins right at that base low right now, kind of just chilling. If it breaks below here, it looks like it wants to come down and test the 200. Snap, same story. You had the inverse head, or not inverse, you have a head and shoulders, which is kind of, I mean, it's not, that's usually a topping pattern. So you see it like the top of a trend, but I guess it could, still looks bearish. Neckline is really, I guess, down here. But let's say snap start to push lower tomorrow. Sometimes I will front run the entry, providing I see there's very heavy volume to support the move. So if our pivot was, we were using this level as our entry because it's the low, it would be giving us a lower low on the daily and the weekly. If we are at this level and I see us pushing lower on very heavy volume, it's a sign that that move is likely just starting, and I would, look to enter there. I would take that little bit extra risk because I like what I'm seeing in terms of volume profile. So that's just an example of really the main variable I'll use to assess whether or not I want to. And then obviously you have to be aware of where the market is as a whole, which right now we're potentially transitioning into a bearish environment. In that instance, that dynamic, I would be more willing to front run a potential breakdown if it's occurring on heavy volume. AMD's right back up. AppFi. So airliners are also in a tough spot right now. You got Love, AAL, losing some important levels here and doing so on big volume. So the whole leisure sector has been getting hammered. You got RCL also losing the short-term moving averages. Obviously CCL we just saw, NCLH, which looked so good just a couple weeks ago, now losing the 50 moving average. Airbnb losing the short-term moving average, just bear flagging. That's actually a nice setup. Bear flagging above the now flattening 50 moving average. Although I can't stand trading this stock. It's just too choppy. But that whole sector as a whole has been in hot water. Oh, I missed this breakdown today. Ribbon. So Ribbon's losing this this base low. So really the entry would have been the first 10-minute candlestick with high day to stop. If we go over here, we'd easier. Just caught this yesterday. I meant to share a whole bunch of bear setups with the group, but time got away from me yesterday. This was gonna be one of them. The high of day is just stop. Because really, if this is going to be a real powerful move that's sustained to the downside, the high of the day that it's breaking down should not be taken out. And if you wanted some way to trail a position, you just used the 5 EMA, which on the 10-minute chart, it's the equivalent of the 195-minute exponential moving average. But right now we'd already have trimmed once, and you would let the rest either go break even or however you prefer to manage it. But you could see the volume's already very heavy. It's almost at it's about halfway through the daily average, and we're only an hour in. So with that said, what I just said with Ribbon, when you break down, you shouldn't lose the high of day. Well, yesterday, AMD broke down, and this is the high of day. That's why I chose that as the stop level, yesterday's high. And we're now, testing it and the 5 EMA. And so it looks very similar, this scenario right now, to back here where it had this little bit of a bear flag here. It broke down, and then buyer stepped up. As a result of that, it kind of just moved sideways. It even tried to recapture the 10-20 before having its next leg down. So maybe this needs more time to consolidate. So AbbVie just broke down. So XLV is continuing lower, and AbbVie is falling in line. It's a nice setup. Alrighty, we're gonna go ahead and wrap it up here. So I'll keep everyone updated with AMD. Obviously not in the best spot right now, but that could change fairly quickly. So you guys have a good rest of your day, and I'll catch you tomorrow morning.
됐다.